Hello traders, Nick Shaheen here looking at Palantir. PLTR is the ticker symbol, and they reported earnings before the open on 2/16, which is today, Tuesday. The US was closed on Monday for President's Day, and we're waking up to a falling PLTR. It fell at 9% at first, and now it's continuing to fall throughout the day. And oh my gosh, call Ripley, or should we panic out of it? So these are comments that are somewhat biased from the standpoint of my opinion of the stock. Long term, it looks like a viable thesis to own it for the long term. Timing the entries depends on personal situations. If I'm an active trader, then I'm probably looking for opportunities on the shorter term to get into it right. If I'm a long-term investor, I probably don't care exactly where I buy it because I want to hang on to it for years. So what ruined everything for me is this silly move with the GME mess. It just ruins everything, right? So now we're back out of it. But it creates this, oh my gosh, now it's down 12%. But yeah, but it was up 1 billion% the other day. So if you went away for a couple of weeks, then you missed this whole mess, and it's like, hey, nothing happened, right? So there are clues that we can take from the charts. Plus, I'd like to raise the caveat of lockups. I don't know exactly what, when, or whatever. I don't think it matters. In the short term, it may matter. I know some Wall Street experts watching this video saying, oh, this guy's a moron. Well, it's worked for me for a while, so I'll stick with it. So there might be some people that are willing to sell, but from my point of view, from the feedback I see, the notes that people, the comments in the notes, and how enthusiastic people are about their shares, I don't think there's going to be a deluge to get the hell out of Dodge, if you know what I mean. So yes, there might be sellers, but every sale has a buyer on the other end. So pick your entry points basically and your timeline. Not everybody has the same time frame, right? So this is a 2-hour chart, just to give you some perspective. We've had a pretty nice consolidation zone. First of all, let me show you my lines. So I had points of interest, these bubbles down here. And then this rally happened, so I added these 2 bubbles up there. One of them held most of the day and then let loose. And now we're still above these bubbles. So I say bubbles because they're areas of interest. And I said, if it gets into this bubble, I'm a long again. So if I'm not long, I would get long. Is it time to panic out of the stock? Not if my timeline is somewhat longer than 15 minutes. No, because if I didn't get out, now would be the bad time to get out, just from the charts. Because this is where this orange line, I didn't draw it. It's actually the mathematical sum of all the trades. So you know about these volume bars down here. This tells me that most of these volume bars, the biggest chunk of them happened right here at 26.7. So when it falls back into it, both bulls and bears, buyers and sellers, bulls sell too. Buyers and sellers are most active. So if there's an imbalance of selling to buying, sell, buy, sell, buy, it hits the zone, there's going to be more buy, sell, a balanced approach, and should be a trough. So this makes a better starting point than a panic point. But again, not recommending anything. I'm just saying, if I'm holding shares, I should have sold when they lost here, but you didn't have a chance. It opened down. I should have booked up here. I did. I was long into this big mess. I wanted to be long for a long term, and I was like, wait a minute, this big mess ruins my setup in a good way. So I got out, and I was like, I'll get back into it later. So, and I did a video recently, which was maybe 7 days ago. I don't know. You can look it up. I said that going into earnings, it had just dropped 6% on that day. I can't remember what day it was. But I said it's a coin flip going into earnings, regardless of how good the earnings are or how bad the earnings are. So I looked at the headlines. There's nothing bad about the earnings. If you're complaining about the fact that they missed earnings, you're looking at the wrong line. The P&L of a growth company, the bottom end of it doesn't matter as much as the top end of it. They grew their top end 45%, 47, I think. And they forecasted growth 45. So they're growing over 40%. How can you tell them to do it cheaply? That's what the earnings part is. People complained about Amazon being weak on the earnings, low margin, losing money left and right. Well, they were spending every nickel to grow the business. And look at how big of a beast it is right now, right? So if people are shorting it or ditching it because they missed earnings, I think they're missing the ball. They're looking at the wrong thing. They didn't miss the top line. They beat it by 20 million or something like that on a base of 300. So for the quarter, that's good news in my opinion. And the fact that they said, hey, going forward, we're going to do pretty much about the same rate of growth, that's pretty strong. So I'll give them a pass on profitability, and I'll judge them on the profitability later. If Amazon listened to all of these critics and dialed back the spending, we probably wouldn't have the cloud because they pretty much built it, the AWS part. And I'm pretty sure it was not cheap to build. Just like it wasn't cheap to build the business from the first get-go, and the delivery service and whatever else they coming next. So profitability is the wrong metric. Price to sales is the better metric. This is not cheap. Price to sales is not cheap, which I'm telling you, but I don't want cheap. I want growth. I'll look at cheapness later. So for now, I'll give it a pass. Having said that, it has to trade inside the prism of this crazy market. And if you look at the Qs, for example, or the IWM, this is not normal. IWM up 140%, maybe more from the bottom to here. This is a basket of 2,000 stocks. A lot of junk in it now too. So it's not normal. Everything has to work within it. So if I'm positive this stock and then tomorrow the market corrects 10% and you're complaining about, oh my gosh, you told me it's not time to panic and now it's down another 10%. It has to trade inside the prism of the whole market. On its own, I think it holds the zone. That's my opinion. And if it falls below the zone, I will take along. So here's the thing. I've discussed it with friends. When do I add? I have rules. They're not like for everybody, but for me. If I bought it at 25, I'm not adding right here just because it's down 20%. If it's down 20% from my entry price, maybe. If it's down 10% from my entry price, no. If it's down only, if I bought it like last week, I'm not adding now. I need time to pass between adding or I need levels to pass. So I need a big differential in price between my entry, because if it bounces back, then I really didn't need to add. If it doesn't bounce back and it continues lower, I added too soon. So it's almost like wait it out. I'm not going to miss out on upside. I'm already in it. I'm just making my problem bigger by adding if I'm red. Okay, so these are my thoughts. Technically speaking, let me see if I can line it up. Where is my marker? There it is. Jeez, computer running slow today. Everywhere. All right, so I like this cluster. I just told you why. Because it's the busiest cluster. I like it from a level perspective because this was the base from which they built this crazy lunatic thing. They already had higher lows, which they're losing today, but it's not a deal breaker. I don't chase trendline breakdowns or breakouts. I'd rather chase level breakdowns or breakouts. Like if it comes to here and it loses this level, then okay, maybe the selling can accelerate because they lost a level that they haven't lost before. This level right here is in contention. I don't see it yet. It was the limit here from which they broke out. It was the limit here from which they failed before. So this whole zone, it's not a lost cause yet. Mind you, I am bearish the SPX, so I could see it falling through it just because of the market action in general. Where is a better base? Anywhere around 22 is a much better base. So how can I use that information to go, oh, great, sort of should I wait to 22? No, I can sell puts on a bad day. A stock that's down 12%, this is not a recommendation. Selling puts is only for grown-ups who want to own the shares. By grown-ups, I don't mean just age, grown-ups in experience. And I would go to the PLTR. You know what? I'm not going to even show it because then somebody will say, oh, I went long. Anyway, so personally, if I wanted to own shares, I would sell puts down here and then hope it falls into it. Hope in quotes, right? Because if it doesn't fall into it, I don't own the shares and I'm only long for as much as I collect money. So if I collect $2 to get long, then I made $200 per contract. If I sold two, I made $2,000 out of nothing. But if it falls to my price, I keep that money that I collected, but then I also have to buy the shares at that price. So I could wake up one day owning shares at the strike price I sold. And that would be great, because whatever happened between the time I sold the put and the time I was given shares doesn't matter on my P&L. Yeah, it looked red, and then the red position disappears, and then shares show up. My break-even point would be lower than that put side, than that put level by as much as I collected to open the trade. All right, so these are my thoughts. Bad day, not a bad stock, not a bad report. People misinterpreting and reacting to the wrong metric. Missing earnings is silly to punish a growth stock. It was silly for 15 years punishing on Amazon. I use it as an example because it's the easiest. And it's silly in this case. This is not Amazon, but it's growing like Amazon. In fact, 10 points more than Amazon. So, like Zoom, they weren't profitable. Nobody punished it on non-profitability because they were growing the top line, right? Okay, so this is it. Nothing here was a recommendation to take trades. We do this all day in the chat room. So if you want to check it out, it's not free to be in it, but it's free to try it out. The PayPal entry cost is $0 to try it out for 10 days. And then the link is down below in the description.